system zone, so it didn't affect my automated systems because they're on VPN. But here we go. We're back on Facebook and just waiting on YouTube to be able to go back in. Okay, that's Facebook. Okay, there goes YouTube. Okay, so we're back. I don't know what happened. My computer basically ended up basically freezing on me. So, or just turning off. I don't know what ended up happening, but obviously I'm going to end up getting a new computer at some point in time. We'll see when that happens, but I think it's more of my graphics card than anything else like that. So let's go ahead and start talking about it. So we already talked about the boot camp. I'm not going to end up talking about that anymore. I just want to go ahead and hop onto the charts. We'll talk about what ended up happening with oil. I ended up saying it to the people on Instagram, but basically what happened was this: market ended up taking a sale. We ended up taking a sale right at resistance. It ended up breaking down to 39.60, which was a very good area. Then after that, it broke a counter trend line break. Well, it gave us an early break, and I really wasn't paying attention to this overall pair. And since then, the market started to push back up. I did see that the pair ended up breaking past this point and gave us a fractal low, and then started to sell back down because the market was in the sell zone. So I was kind of interested in seeing, okay, how's the market going to end up reacting off of this resistance? Because the market has hit this resistance and fell down again. Subsequently, when the market ended up breaking past 41.80 and basically broke past this overall area right here, which was that high of that previous move that we ended up getting stopped out on the last time, I ended up saying, okay, well, I'm just out, because I know that the market was going to end up going up to 42.70, which was basically a previous high and a previous resistance area that was not hit previously before. We can see that based off of the daily movement that, quite frankly, 41.70 was right here at the top of where this overall triangle started from an overall position. So if it was going to go up there and hit this resistance, then quite frankly, it was going to take us out of the market. So what am I looking for now? The market is actually still within this ABCD sequence and is still giving us a great value to be able to sell down. But now, if we're looking at where the position actually is going from this overall pair, we actually lose the take profit at 31.40, and the market is starting to move back up to this area. So that's expected to be, when we're looking at this now, it's expected to be at basically 35 or 34.74 or 34.73. So basically 35 essentially, which will end up being a new low. So I'm going to say 34.75. We'll look at being able to get out around the 35 area if the market ends up moving to the downside. So we get a counter trend line break. Market ends up giving us a little bit of a forceful of a move, and that'd be something that we can be able to think about with getting any type of value. We can see that the daily is in the sell zone. So if we get any type of counter trend line break, I would be interested in being able to sell. But now we just get a higher value, and hopefully maybe it ends up popping to the downside and we end up going from there. What we're looking at is this. I'm going to move this out the way. I'm going to end up putting this counter trend line right here. Here goes your outer trend line right here. Here is your inner trend line right here. The market ends up breaking past this overall point on this inner trend line to the downside. Then after that, I will look at being able to take a sale. Now, the question is, can I bet a little bit heavier on this one? Hypothetically, yes, I could. The question is, should I? The market's in the sell zone. The market is at a deep 8-6 position. That's going to give us the highest value of risk to reward if we decide to be able to get out. Now our stop will end up being at $44. If the market keeps on pushing up past $44 before giving us a chance, then that means that we're just out. But right now, we end up getting a break. We end up getting a breakout. We end up getting a retest. We end up getting a push back up. So we have to keep in mind, where is the up fib going to end up being off of this move? The up fib is expected to be able to go up to, hold on, give me a second. Let me try that one more time. The up fib is expected to be up to, okay, it didn't give me a fib. And as well, this market is basically giving us a low price and a counter trend line break. We had the counter trend line break right here. We had the retest right here. The market ended up breaking below the low, but did not break the A. As long as the market stays, right around this overall area going into next week, and stays above this overall purple trend line, then we're okay. As long as the market does not break this overall support at 1875, then we're okay. Now, if the market keeps on pushing to the downside, then that means that, quite frankly, we're not okay, right? We have to be able to keep that in mind for the overall movement. And from there, you might have to look at being able to get rid of some of your pairs and being able to take short profits and whatever may be the case. We got in at 1855. If the market continues to move in its overall direction towards the upside, we expect that the market is going to go to 23.25 long term. Now, we need a little bit of help from We need a little bit of help from people not necessarily buying on the dollar and being able to push the dollar back up to its overall position, and maybe just a little bit of luck when it comes down to that overall movement as well, because the market is leaving from the sell zone to the buy zone. But as long as the market ends up staying within this overall area, as long as the market ends up staying within this overall area without breaking this overall trend line and going below 1845, I think that we're in a solid position to be able to go from there. Now, even if it breaks below 1845, yeah, it's going to end up breaking a daily upfield, but it won't break the weekly. It'll just be basically in another position. And now we have to focus in on, okay, where's the market going to end up rebounding at? As long as the market ends up holding and stay around this area, then I'm actually good with being able to stay in this trade. If not, then we have to be able to look at some other opportunities on being able to trade it some other way and going from that position. But right now, if I was you, would you get into it right now? Absolutely not. We end up not looking at that at all. Now, or just wait until the market gets into the buy zone. Now, taking a look at this, what we're going to end up paying attention to, because remember we said U.S.-based pairs are probably going to end up being well, no, let's take a look at some U.S.-based pairs real quick. Let's see if we can be able to go through these quickly. Maybe we might have some type of opportunity. Euro United States dollar has already failed, and quite frankly, that move is already gone. We have a counter trend line break right here. If the market's going to continue to fall, it's going to fall down to the 1.16 area, or basically 1.17. That's about 60 pips away. If you're interested in being able to trade that, then I will only look at being able to scalp the market, being able to place my stop just above this overall swing high of this overall move, which would be about 79 pips. But think about this: you're going for 142 with a 70 pip stop. That will probably be a good position to be able to get into. I'm not trading that just because it's in consolidation. Obviously, we're in a no trade zone in consolidation, so this market could move back down to this 1.16 area, and then after that, pop back up to the upside, which to be honest, that's what I kind of hope when it comes down to this. But my EAs have caught it, and obviously I'm in certain trades right there for it to the downside. So we'll see how that reacts. But right now, that's not a good trade to be able to get into. One trade that I'm upset about, we ended up talking about this on Monday. I ended up saying, okay, this market was at 90 for its overall move. What are we going to end up doing for this move, for its overall break? The day after that, it ended up going back down to a low. I'm sorry, that's a weekly. We end up looking at this on a daily move. We end up saying that this market was basically at 90, and we said that if this market is going to end up holding support, then we should see the market start to push up. Now, it has 1,000 pips for its overall movement to the upside, which is a good thing. This market has held position from right here and then subsequently end up moving 171 pips to the upside. I guess the thing would end up being this: if this market is going to end up remaining to be bullish, then it has to be able to break out of this 92 area, which is basically this overall consolidated area right here. If it breaks out of this overall area, then we should be looking at movement to the upside long term. If it doesn't, then that means that we're going to end up seeing some more drop of this overall movement. The market could go back to 90 overall, but we are in a consolidated area. Would I look at being able to buy right here? No, I wouldn't. Would I look at being able to sell right here? No, I would not. Not yet. The market's not at 92 yet to be able to go from there. But if you end up getting into the buy on Monday, in which we talked about that earlier, then congratulations, let's stay in the buy. And obviously, you should be in for about another 30 pips. The U.S. dollar index is in the buy zone, so you should have movement to your side going forward. So U.S. Swiss franc is considered to be bullish in consolidation, but right now we're in a no trade area. U.S. Japanese yen, we're looking at this overall movement. We end up getting into this trade down here at the 136.60 area. Market broke a counter trend line break, started to move up. We got stopped out at 105.60. The market has been hovering around 105.60 at this particular point. We're looking at what's happening with the daily. The daily is in a no trade zone for this overall position, but we're basically at. Oh, when it comes down. Everyone, give me 1 second. Go upstairs, baby. If we look at the overall position, we can see that the market is at a 786 for the overall top side. The stop will have to be above 106 or 106.10 to be able to make a trade to the downside. If that does happen, now the overall move from the sub-fib area would be 102.83. For that movement, the market from a long-term field will still be at 101.79. So question is, are we going to end up seeing that the Japanese yen is going to end up getting stronger? Or we're going to end up seeing that this market is going to end up retracing up towards this purple trend line, which will basically end up hitting this overall sub-field spot. All right. So once again, that's something that we have to think about on this market movement. But right now, wouldn't trade that yet. I will look at it, but would not trade that yet. Um, we're looking at this position. We're saying that the Australian dollar, United States dollar has popped up to the upside. The market is in the sell zone, which means that we should see a little bit of retracement, but the market has broken out of consolidation to the upside, retraced from this overall position, and has basically pushed up to this high. The market is at a deep 8-6 position. The market is in the sell zone. If you're looking at being able to sell because you expect that the market is going to end up going down, this is a great value for us being able to look to be able to sell with your stop loss above 73, basically 73.50. Now, if the market does fall down to this position, then the market will go down to the 69 area, 69.50 to be exact, for its overall move. Your risk to reward on this overall trade will end up being about 82 pips going after 332. So you have a 1-to-4 risk reward ratio for that. So I want to tie that in. I want to see what's happening with the weekly. And if the weekly is considered to be bearish, then we might end up considering this. But let's see. If we look at the weekly is basically broken the counter trend line to the upside. Basically, we're looking at a retracement from this overall move. So the market is actually considered to be bullish and not bearish for its overall movement right now. And because the market ended up breaking out and it's only retracing, then the market could hover around this spot. Can we give me, hey, what's going on, Technology Scorpion? Sorry. Can you give me a view for gold? We already went through it, but I get back into it one more time. Let's give me 1 second. I'm actually in gold at 1855 and 1860 as we go through. Just give me 1 quick second, and I go back over it. Sorry, I wasn't paying attention to that. So we'll look at what happened with the pound. Pound right now is at a position to where it's broken up to 133. This market's in a bull. This market is in a bullish crown. The market is expected to be able to go up to, from this position, right around we're looking at right around 138 short term, 144 long term, but that's going based off of Brexit news. I'm not trading this until we end up knowing something about Brexit. If they don't get everything passed before the end of November, then the market's going to end up flushing down again. And then, quite frankly, we should be looking at sales. But overall, it's not necessarily the best position to be able to go in from there. So, Technology Scorpion, let's go ahead and talk about gold one more time, just to kind of refresh on what I end up saying. Long term, when we look at the weekly, what I expect for the market to be able to do, the market is basically leaving from the buy zone, going to the sell zone, which means that we expect that the market is going to end up pushing up at least for maybe 2 to 3 months to the overall upside. Right now, we're in the early days of this overall movement. And as long as the US dollar remains to be weak, then that means that we should see that this market should gradually start to go up. Over the course of the last 8 quarters, the market has been pushing up bullish. Now, it has been gradually pushing up, but it has been pushing up bullish. So we should see another move to the upside. The market broke the counter trend line break last week, went up to 1960. Then after that, on Monday, the market actually ended up going down. I think that was more election related and being able to find a vaccine for the coronavirus related. Once that ended up happening, we actually ended up breaking this overall trend line to the downside, but it ended up finding support at a previous position right around that 1850 area. So even though the market was in the sell zone on the daily, I actually ended up taking a buy right there because I believe that this was probably going to end up being one of the lower prices that we're going to end up getting as long as the market ends up holding positions right here. So to me, the weekly is still considered to be bullish. If we look at what's going on with the daily, we can see that we end up having that breakout of overall position. Market subsequently then end up hitting the overall D extension. Now we're looking at a new ABCD fib at this position, which will end up being, which will end up being right here, but the A was actually broken off of this move. So here's where we're at right now. The question is, are we going to end up seeing consolidation on the daily, or are we going to end up seeing more of a bearish crown on the daily and the market continues to flush down and then go below 1843? If it goes below 1843, that 1850 area, then the market will fall down and then try to find support right around this area right here, which would be right around the 1798 to 1800 area. Obviously, I don't want that to happen because I'm obviously in buys. But overall, as the market starts to keep on waving down from its from the sell zone and going to the buy zone, as long as the market ends up holding right around this 1850 area, then I do believe that the market will, after that, basically push up, push up past the purple trend line. Then after that, find support from there, and then after that, slowly start to gradually start to move back up overall. But once again, we need a weaker dollar for that to be able to happen. And if we look at rising cases when it comes down to coronavirus, we look at no stimulus check talks when it comes down to that, and a few other things. As long as those things remain to be the same, then after that, we should see that gold should keep on moving back up. Also, I would pay attention to Bitcoin when it comes down to that and see what's happening with that pair. So hopefully I answered your question. Right now, would I get into it? No, I wouldn't get into it right now. I would kind of wait for the market to get into the buy zone and kind of give you a lower price and see what's going to happen over the course of these next couple of days. But if you were already in it because you end up catching it right doing a low, what ended up happening on Monday, I would just stay in and go from there. Hopefully that answered your question. So let's take a look at the Forex screener. I want to take a look at one pair before we get out of here. I want to take a look at the New Zealand dollar Japanese yen. The reason why I want to take a look at the New Zealand dollar Japanese yen is because I see that the ADX is basically up to 20. I can see that the stochastic is up at 97, which means that if there's a sellable position to be able to take, this would be the best time to be able to do it because momentum will actually end up being in that overall position. Now, remember, we end up saying that the New Zealand dollar basically New Zealand dollar was basically strong overall. You're welcome. You're welcome. If we're looking at this overall pair, we see that it actually ended up breaking out of consolidation. Quite frankly, there's no trade to be able to take anymore. If we were looking at being able to sell it to the downside, the only thing that we're looking at right now at this particular point, when it comes down to this move, would be, okay, how far is it going to end up going up? We have to look at the upfields to see that, but we end up having a breakout. We had the retest yesterday, and then after that, we had a push back up. 70. The market has been finding support right around that 73.50 area. I'm sorry, 72.50 area. Right now, we're hovering around that overall spot. If we're looking at volume profile will end up telling us that, quite frankly, we're in a heavy traded area, but we're not at point of control. So this market is still considered to be bullish. And I was looking at being able to sell on this overall position. So I'm going to stay away from that one. But we got time for one more pair. Let me see what we can take a look at from here. Australian CAD sell position. We're at 1951 and we're looking at 91 when it comes down to that position. Let's see. Oil end up pushing up, so we should be looking at sellable positions for that. I don't want to use FXCM on this one. I want to use Olanda. Let's see. Okay, so what are we looking at here on a weekly? Hold on, I need to clear this chart. Matter of fact, let me go and take a look at it from this one. Okay, so here we go. What's happening? We're basically, I need to keep that. I actually need that one. We're basically at a position to where this market has basically broken from this overall lows that ended up happening way early in March. And then after that, pushing past this overall position, finding support at 92, and then starting to push back up. Overall, this market is considered to be bullish when it comes down to price action. The market is expected to go up to 98. Currently, the market right now is at 95, and we just look at what's happening in this overall area. Is this a U-turn area at all? Right now, that answer is no. There's no primary support. There's no primary resistance on being able to trade this. So trading in this area is very risky if you're trying to sell it, if that makes sense. The monthly is in the sell zone, but quite frankly, that doesn't really mean anything right now at this particular point because we don't have an area where the market has basically U-turned. So if we go through that, I'm going to say that the market is considered to be bullish on the monthly. We go into the weekly. With that being said, let's go and take a look at where the market could go. We're looking at that from the monthly. The market has basically retraced to the short position. The market has not went to the 382. but it has found support. So overall, if the market does go up, it's going to go up to 107, which is once again another resistance area where the market end up going to. All right, so we break that down and we end up paying attention to what's happening off the weekly. Off the weekly, the market is basically in the buy zone. We see that overall we have a counter trend line break that has not fully broken for the outer trend line break, but the inner trend line break has broken. We go right here and we take a look at that from this spot. So typically what will happen is the market will break from the outer trend line, go to the inner trend line, and then after that, or at least react to it and go from there. So the market, in this case, I'm expecting that it will end up going at least another 100 pips up to 96 before starting to make any type of move. Now, what we end up looking at with the ADX and everything else like that, we end up seeing that the market will end up personally going, was in a position towards that 19, but also the market was expected to fall because it was at 93% when it came down to the daily. So that means that we missed the move on this one if we were looking at being able to buy 2 weeks ago, essentially. And there's no position to be able to get into the daily right now. It's probably in the sell zone. Yep, daily's in the sell zone. So quite frankly, we have a breakout, but right now we don't have a retest. So this position is something that I'm not looking at overall. Obviously, we've seen that from the monthly because there's really no U-turn area. But wanted to make sure we end up seeing it from a weekly and a daily perspective. So right now, really no trades when it comes down to FX crosses and everything else like that. Gold, we are in pairs on that one. We're trying to remain to be patient. Hopefully the market will end up playing out for us on that one. Obviously, we looked at the U.S. dollar index. The U.S. dollar index is expected to be bullish, so we should see that the U.S. dollar should start to get a little bit stronger going into the rest of this week. We see that the New Zealand dollar ended up doing very well last night. We ended up getting into the New Zealand dollar, Euro New Zealand dollar, and ended up making about 200 pips off of that movement yesterday. But overall, there's really nothing else to be able to pay attention to, at least for right now. We'll see how the market kind of reacts off of that. You like what we end up doing, please make sure that you like the Carter Cow Capital business page on Facebook and on Instagram. If you like what we end up doing on YouTube, please make sure that you subscribe to Trade with Travis. We do this each and every morning from 7 a.m. to 7:30. Please make sure that you end up sharing this video to people that you think may end up being helpful. Remember, we're going to end up having our boot camp November 23rd to November 27th from 9 p.m. to 10 p.m. Each and every day. It'll end up being a live stream that's Eastern Standard Time for the people that's on the West Coast. If you're interested in being able to learn more about that, you can be able to go to and be able to get more information by being able to take a look at the Facebook events page. And I'm going to place that inside of the chat box for each and every person to be able to take a look at that. And also, there it is in the chat box on YouTube. Here it is on the chat box on Facebook. And also, if you're interested in being able to purchase your ticket, this is the actual link to be able to do that. And we're placing that inside of the chat box as well. I do appreciate everybody that ended up popping in and watching this video. I do appreciate everyone that is going to end up seeing this video a little bit later on today. Obviously, we went a little bit longer than what we were supposed to today because everything ended up going out. But obviously, we ended up making the best out of it. You like what we end up doing, like always, make sure that you end up dropping a like and a comment and everything else like that. Until then, make sure that you end up planning your trading your plan. Everyone, y'all have a good one. Y'all have a great Veterans Day. Make sure that you end up saying thank you for your service to somebody that has been in the Army, the military, or anything else like that. And we'll see you tomorrow and see if we have any trading opportunities from there. Take it easy.